Good morning, everyone. Welcome to Monday. Welcome to Monday Minutes. Let's get right to it. Kevin Warsh on the table right now. The confirmation process could be a little dicey at times here. Historically, more of a hawk, but it's hard for us to imagine that the president would nominate him without a conviction to lowering interest rates. So when we look at the rate structure on the short end, we look at market pricing, 2 to 3 rate cuts for this year seems very, very plausible. On the economy, we still think the economy is in great shape, and we think we're going to have a good year. Certainly some weather-related effects early in the year. So we see the rate cuts coming a little bit further down 2026 than sooner, and that's what the market is pricing. Partial shutdown, we think we get past this. We can't afford another full shutdown. And we do think we're going to move past that. On Fed speak this week, very limited in general. Fed Governor Chris Waller, obviously a dissent in terms of last week's Fed meeting, saying he thinks rates should come down, and we agree with him. The employment number this Friday is key. Certainly the inflation numbers are running slightly higher than expected, and the economy is growing at a good pace. So, when we look at duration, when we look at the long end of the curve, the short end looks fine. When we look at the long end of the curve, we have favored curve steepening, 4.25 10-year yields. If you look at where growth is, where inflation is, there's really nothing inappropriate right now in terms of the overall rate structure. But we do look for the administration to continue to be creative here in terms of the overall economic environment, where the rate structure is, where we go from here, the housing market moving forward. Wishing everyone a great week ahead. I'm Greg Faranello. I'm head of U.S. rates for AmeriVet Securities.